Good morning. This is the weekend update for Buy Sell Short for Saturday, June 14th. And, last couple of weeks, even though there's been some nice trades, they've been few and far between. And this week, last couple of days especially, we saw the market sell off with the crisis ongoing in Iraq. And actually, that sell off ended up creating a fantastic market this week. Very, very active small cap market, biotechs, energy stocks, thanks in part to what's going on in Iraq. And all in all, it was just a great week that hopefully will continue into next week. Looking at the Dow daily chart, you can see that extreme overbought level that we were at. Nice little sell off. Consolidation and bounce on Friday off the 20-day exponential. And you recall I'd mentioned that stat a few days ago, S&P up, the RSA or RSI, one of the most extreme overbought levels we've seen in many, many years. And 15 of 17 times that had happened, the S&P lost at least 0.5%. Next day, S&P was down 0.5%. Day after, 1.5% overall before we saw this bounce. So, it's one of those things I love looking at stats like that. And, the interesting thing, when you see crises such as we see in Iraq, it actually ends up helping small cap stocks and speculative stocks because traders rush into a hot sector, this time being small oil stocks, because obviously, oil prices are going up and it's going to be a big benefit to the small oil producers, especially those in the U.S. And that speculative momentum has a habit of spreading out to other sectors as that momentum continues. So that's a very nice positive. As for the Dow, we could see a continuation bounce here. We've got RSI at the 50 level, but if we continue to fall, that 50-day moving average, about 200 points or so below, is the level we really want to keep an eye on. If we break this uptrend line that goes back to February, we could be looking at a 500 to 600 point sell-off on the Dow. If you look at the 15-minute chart, you can see that long bearish rising wedge that was in place. We've now flipped into a bullish falling wedge. We did get a little bit of a reprieve on Friday that could portend a bounce on Monday, but it's all going to depend on, what overseas news we get. Dow Transports got hammered on Thursday. No surprise with that big spike in oil prices, but again, fell below the 20-day exponential and was able to claw its way back up above it. So going to be interesting to see what happens on Monday and Tuesday. One thing to keep in mind, as you notice here on the volume has gone up on the sell day. So that is something to keep in mind in the back of your minds. We got to keep an eye on that. But again, this is a very oil-sensitive sector, so it could be a big part of that reason being what's happening in oil prices. Nasdaq consolidating, Russell hammer bottom potentially here with a little bit of a flag. So again, come Monday, Tuesday, we'll get a better idea where the major indices are going to be going over the next couple of weeks, whether this was just a brief pause that's going to result in us rocking to new highs, or if we're going to continue to see some downward action. You can see here on oil, I pulled up this chart. This was something we had talked about in January and February regarding this long-term W formation that we saw in the chart of oil. A very bullish formation, and typically what you do is you just draw the W, and the upward angle is where oil prices tend to go. And you can see it's been consolidating back and forth. And if I was to draw another setup here, this is what we would call an ascending triangle, and that break of 105 this week, looking at this chart, is pretty damn significant all around on this chart, and could portend a move to 112 to 120 on oil prices. If that happens, that could provide a pretty big time shock to the economy. So again, that's another thing we need to keep in mind. Anyway, let's jump into some stock plays. Fantastic week for us on plays. ZLCS. You got to love it when a biotech chart sets up nicely and then boom, big news, and the stock runs 50% the next day. Got to love it. Monster win on this one. And then on Friday, we jumped into BGMD because it had a similar chart set up, a small little biotech stock, and the next day, boom, our target, we had pretty conservative targets. That first target was the 20-day exponential, which is 117, hit 118 on Friday before it pulled back. Next level to watch for on this would be a break of 120, and we could be seeing a move up to that 135 area. Rock solid support right now at $1. So if you're trailing a partial position, this is where your stops would be. New alert, ACST. A stock we've played many, many times, but it looks like it has definitely bottomed out. They're expecting Phase 2 trial results at any time and approval from the FDA to begin their Phase 3. Nice volume pop on Friday. Got above that 50-day moving average. Halted around the 1 level. 103, 105 is the next key break level. And this is a level that if we get a break on volume, you're going to see a lot of traders come in and chase just like they did on the other biotech stocks. And there's an upward possibility of $1.20 to $1.25. Very strong action on this one. If you're looking for a place to play stops now, 91 cents. The 20-day exponential looks like it is a good stop zone for this price. Another biotech stock with an event upcoming this week is EVLA, presenting some data on their melanoma product this upcoming week. You can see our first target was the 50-day moving average at 47 cents. But as you can see on this chart, major resistance level around 44.45. So this zone, 44 to 47, is going to be a key area for this stock. And if it does get a break, it could see a potential upward move to 65 cents. Of course, that's all going to depend on what kind of news comes out and what kind of volume comes into the stock. NTN. Now, on Friday, news got released that Priceline had bought out OpenTable, and that sent stocks like Grubhub, Yelp, etc. up big. Anything to do with restaurant technology was up big, although some of the ones that moving, I think it was a stretch. You know, Yelp going up the way it did. They don't really do that kind of technology, but a big thing that they were talking about regarding the open buyout was payment technologies on restaurants. That is NTN, and based on the price that Priceline paid for Open, NTN is just woefully undervalued, being rolled out in all Buffalo Wild Wings under trial with other. I mean, these guys have their current product in places like Applebee's, TGIF, Hooters, etc. Big breakout at the 50-day and 200-day moving average at, let's just say, 59 cents. Break that, and we're looking at 70 cents plus. Any sort of PR, and we could really rock and roll on it. Last time this stock had a big volume move, unfortunately, the next day they came out and dropped financing. These guys are now adequately financed, so this break of the 50 and 200-day moving average next week should set this one up for a very, very nice move in the near term. As for oil plays, we were very, very active the last couple of days on oil plays. SSN, big mover for us on the oil momentum, 36-37 breakout. We got as high as 43 cents on Friday, rocking and rolling. And you know, of course, with small oil stocks blowing up, DEJ is our babe. Now, DEJ, since that huge run that we saw back in March and April, has kind of been just slowly consolidating back down, but it's been holding great support at the 200-day moving average, which is around 18.5, 19 cents. Now, you can see this setup that we have here is essentially called a symmetrical triangle. And whenever you get a symmetrical triangle breakout, for all intents and purposes, it was 22 cents, but let's just say 23 cents. The way to project the target on that break is to take the height of the triangle at its widest point and then add it to the breakout, and that gives you a target. Now, the widest point of this triangle is 14 cents to 31 cents. So we're looking at a 17-cent height of the triangle. Add it to that 23-cent breakout or 22-cent breakout, and you get 39 to 40 cents. Very, very nice upward target. We're waiting on news regarding the joint venture with their oil field that's been alluded to by the company for many, many weeks. That news comes, this stock will blow up. Now is a perfect time for DEJ. Look what LEI has done over the last few days. Up 40% in the last couple of days. A 40% move from this price takes us to that breakout level at 31 cents here on DEJ. with oil stocks blowing up right now and the issue in Iraq probably going to continue for the near term, this is an excellent speculative play in the oil market, in my opinion. Would be looking to buy any dips on this stock for a big move. The chasers, just like last time, will probably come in here on a break of 24 to 25 cents is where the chasers will come in, and it'll rock to 30 cents rather quickly, I believe. From this price right here, that's easily a 30% upside move with 10% downside, and the potential. A couple of analysts in the last month or two have come out with 50-cent price targets, and the CEO believes that his stock is worth, that the assets are worth 72 cents. That's 300% higher. So you've got anywhere from 30 to 300% potential upside with 10 to 15% downside with a hot sector right now. I love risk reward like that. So looking good going into next week. Have an awesome weekend, guys, and see you in the chat room on Monday. Bye.